What is up, everyone? So today I'm going to show you guys two stocks that I think have very significant upside. One is an airline stock, and the other is a Chinese internet company that basically helps American brands enter China and offers end-to-end solutions for that. So to get right into it, let's just jump into my computer screen, and I'll kind of break these stocks down a little bit. So the first stock that I'm looking at is called Spirit Airlines, and this is a discount airliner similar to JetBlue and Frontier Airlines. So this company operates about 420 daily flights. And as you can see, this stock really tanked recently. This was partly due to earnings, I think. It was right around when they reported earnings. And I know that they are having trouble with their contracts for their pilots. I think their pilots are on strike right now. So they're still working on coming up with a contract to keep their pilots. So I think both those things kind of made the stock tank, and it's really tanked quite a bit. And right now it trades around 10 times earnings, which uh, that's not too bad. I know a lot of the airlines have come down quite a bit recently. Let's look at like JetBlue. That's come down. American Airlines, Southwest. So yeah, a lot of these airlines have come down quite a bit. Um, Not quite as much as Spirit, but the main reason for this is because basically within the last month or two, the discount airliners like Spirit, JetBlue, and Frontier, and the other major American airlines like Southwest, American Airlines, United Airlines, and Delta. Basically, they've been having a pricing war with their fares, with the other discounters. So that's kind of caused a little bit of a sell-off in most of these airline stocks because they're worried that their margins are going to get cut, and they're not going to be as profitable. But a thing that I'd like to point out with that, um, with the fare war, is that Spirit Airlines, their business model is designed around that lower price airfare. So when these other major airliners like American Airlines and Southwest try to compete with them, I don't think that's going to be a problem for the discounters like Spirit as much as it will be for the ones like Southwest, where their business model is not designed for that. So I don't think this will be too much of an issue for Spirit. I think this is right around these levels, around 32 to 35. Is really a pretty attractive level to start buying. Um, let's go look at the 2-year chart. So yeah, this is pretty much right around its low that's been at for 2 years. Um, so I do like it at these levels. Let's go a little bit further back, 5 years. Um, and yeah, this is pretty much at its 5-year low as well. So um, I'm pretty comfortable with buying this at any level, pretty much in here. Um, the other major airlines, trying to compete with these guys, I think, you've seen ticket prices decline for some time now. I know like a decade ago, ticket prices were considerably more expensive, especially with higher gas prices. So yeah, the low oil prices also help this. That's another reason why this has been seeing some pressures because Hurricane Irma, um, just kind of the fear of that kind of delaying flights as well as higher oil prices. Any level around here, I feel comfortable buying this. So let's go ahead and move on to the next stock, which is called Baozun. So basically, this company provides e-commerce solutions for brand partners in China. So like a lot of American companies, if they want to enter into China and start like e-commerce websites, they help with things like IT infrastructure setup, online store design and setup, marketing campaigns, warehousing, and order fulfillment. And they work with some huge brands like Nike, Calvin Klein, Michael Kors, Tommy Hilfiger, Victoria's Secret, UGG, Starbucks, Samsung, Red Bull, Bosch. So they work with some major U.S. brands. Basically, they help them their website design and just basically entering into the China market and trying to develop more of a brand in China. So yeah, this stock, as you can see, it's really been flying up. Um, just a few months ago, this was trading around 15, $10 a share. So yeah, it's like really unfortunate that you couldn't buy back here, but I think this company is just getting started, and it is forming a nice little cup and handle pattern, which is pretty bullish actually. And down here on the RSI, it's looking like it's about to enter into anything above 70 is, or this line is considered overbought. So it's getting close to overbought, but looking at the MACD lines, it's still trending upwards, and it's not quite overbought down there either. So I don't think this is, even though it's come up, you know, within the last couple weeks from like 26 to almost $40 a share. I don't think this is, quite overbought yet. So I feel comfortable buying this anywhere around, 35 to 37 a share. It's really unfortunate that I haven't bought this stock yet. I just stumbled upon this stock a couple weeks ago, actually, when I started investing in Shopify and Wix. I've heard this stock be compared to Shopify, and they do offer somewhat similar kind of business model. Helping with web design and stuff like that. Shopify, they're more for the individual that wants to start their own e-commerce website. So if you don't know what Shopify is, basically they help the individual create their own e-commerce website from scratch, and it's pretty easy. It takes a couple hours. I've used it before, and I do own that stock as well. How Baozun differs from Shopify though is they work more with brands and helping them enter into China. Whereas Shopify is more for the individual and their website design and e-commerce solutions. And Baozun is valued around 2 billion and Shopify is valued around 12 billion, just for some context. And Baozun is also partnered with Alibaba. So just like Shopify is kind of not necessarily partnered with Amazon, but they provide integration into Amazon and eBay as well. So Baozun is directly partnered though with Alibaba, and basically that provides direct integration for the Alibaba website, which if you don't know, Alibaba is kind of like the Amazon of China. And China's market is just, the potential is huge. I think that's really just getting started in China. They have a population of 1.1 billion, and their middle class is growing more and more every day. So the potential in China is just massive, and I think this stock is just really getting started. I think around $2 billion valuation. This stock, the potential that this provides is pretty insane in my opinion. With this stock and really any Chinese stock, you run into the risk of accounting fraud and stuff like that. That has happened before with some Chinese stocks and companies. With Baozun being partnered with Alibaba, that does provide some comfort in my opinion. But you still always run into that risk with any kind of Chinese company. Let's go back a little bit. I think this IPO'd in like 2011. So yeah, as you can see, used to trade around $5 a share back in, this looks like a few years ago. And as you can see, this stock has really started to take off. This stock has really climbed very quickly. I still don't think it's overvalued. You might see a little bit of a pullback because it has run up so far so fast. And any kind of pullback that we do see, I will be buying a considerable amount of shares. Like I said, I really like this company. I think this stock provides a huge payoff potential for the risk that you're taking. And that's really what you're looking for when you are investing in the stock market and trying to find a company that has really a big potential payoff, but the corresponding risk is not necessarily high. A lot of people think that high risk or high reward means high risk, and that's not necessarily always true. So that's really what you're looking for is high reward, potential for high reward, and the risk being potentially smaller. And I think this stock really offers that. So yeah, those are the two companies that I think have pretty big potential for upside. Spirit Airlines, you're not going to see, I don't think you're going to see that stock double, but I do see some upside to that. This company, who knows? The sky's the limit with this one. I'm really excited to see what this company does and where this company's at in, 2, 3 years. So I hope that gave you a better understanding of those two stocks. And I do want to mention that Baozun, I hope I'm pronouncing that right, that is a little bit riskier of a stock. Really, any Chinese internet company or any Chinese company for that matter is a little bit riskier, just because you can deal with fake accounting issues and stuff like that. But I mean, I do think that this stock has great potential. It has gone up considerably, so I would wait for a pullback. Other than that, I hope you guys enjoyed this video, and I'll see you guys in the next one.